What's also in focus are OMC stocks. Have been buzzing lately on reports that their marketing margins may have revived due to crude oil prices falling. Analysts see a re-rating case building for OMCs. Ajay, what's the story looking like there?
Well, that's correct. If you look at the oil marketing company's stock prices, ever since there was a forced 1 rupee absorption on petrol and diesel, if you look at the rebound which has actually come in all the three oil marketing stocks, almost 30% to 50% rebound, with HPCL rebounding most from that particular low. That is because we are given to understand that the losses which the companies were starting to make, which the government had kind of forced oil marketing companies to take in their own financials, that is made up for completely, and that marketing margins have turned positive once again. And because of course, crude oil prices coming down. Not only that, there are big, brokerages like Citi, CLSA, some of the smaller ones like, even today Systematics came out domestic. So big upgrades have started to come in gradually. They are pouring in, calling attractive valuations and attractive dividend yields. And now marketing margins are back to the pre-exercise level. In fact, today also all these oil marketing stocks are trading in the green. So that makes a case to check with the oil marketing company managements exactly what's the status right now, and if indeed marketing margins are positive, how does the financial situation look from here on?
Right. Ajay, thanks very much for that. Let me just very quickly touch base with Mr. M.K. Surana, who's CMD HPCL. Analysts are saying, Mr. Surana, good morning to you, that the worst is over for OMCs, with their marketing margins seeing a revival. Your take?
No, the question is, we need to look at it this way, that whether we are able to align the international prices and the domestic prices. To that extent, yes, now we are able to align our domestic prices to the international prices.
Confirming to us that the gap which had come due to government decision of making you absorb that 1 rupee per litre is gone now.
Yeah, because the crude prices and the product prices are lower now, so that problem is not there as of now.
Right. Is there a risk that the government may remain more populist ahead of elections, and hence for OMCs things could remain uncertain?
But as of today, the way the projections are, the crude prices right now, let's say as of today, is around $59. Okay. Now, nobody is actually projecting that it is likely to go to, let's say, 80 or 85 level in the immediate future. Okay. So we should hope that the prices remain on the lower side. The normal expectation is till March it will be below 70 only. So if that happens, then that problem should not be there in my opinion.
Right. Mr. Surana, so if crude indeed remains low, as you are thinking it would be, what is the outlook far out, say 1 to 2 years?
1 to 2 years in the sense that the way now the people see the crude market, that nobody is predicting now that it will be 100 as it used to be there, let's say, some time back when it was going to 85, people started thinking whether it will cross 100 or what. That is not the case now. There is a normal thinking that the supply-demand balance has shifted a little bit, in the sense that now there are players like America, Russia, who are substantially producing more than what they used to do, and almost equivalent to what Saudi Arabia was producing. The demand side, there are certain concerns which are also keeping the prices back. And the US shale is one element that they have got a capacity to produce more. Next year, the infrastructure constraint which the US had related to Permian basins will get solved as far as pipelines, etc. are concerned, which will allow oil to flow out of US. So we hope that the prices should remain in a reasonable band. But of course, there is nobody who can predict the oil price market correctly. So the geopolitical situation and other issues also may have a bearing on it. But we still expect that the prices should remain in reasonable levels.
Right. What about the volumes now? Because there were reports that volumes have dipped because of demand destruction. Are you in a comfortable spot?
See, if you see April to December this year, the demand of, let's say, MS has grown by around 7.6%. HSG has grown by around, let's say, around 3% or so. Overall, if you see the petroleum products, there was a growth to the extent of around 4%. There is a reasonable growth level in Indian market. There may be issues on month-to-month basis depending on what was the sales last year of the same month versus this year. There are seasonal effects. In India, the festival times also makes a difference. Like last year, October was Diwali. This year, November was Diwali. Before Diwali, there will be an increase in sale. Immediately after the Diwali or during Diwali time, the trucking activities reduces a little bit. Those type and rains, harvest, etc., those effects will be there. But I think there is a reasonable growth.
Okay, Asian refining margins are dipping now. How serious is the trend in the weakness? And, would that impact your trend on margins as well over the next couple of quarters?
See, actually what is happening is that cracks of some of the products are on the lower side, especially gasoline. If you see, the gasoline cracks had been in the range of $1 to $2, which is quite low. Gasoline cracks has made up and down. It has also gone substantially higher, $16, $17. It can come down to $2 also. Diesel cracks are still okay, but LPG and MS cracks were on lower side, and that was because the refinery GRM says the basket of the products cracks. So to that extent, there was some pressure on the refinery margins. The good part was the gas oil, that is diesel. Their cracks were good, and gas oil in Indian refineries is a substantial portion of the total production. But still, the gasoline and LPG cracks lower side does put a pressure on the refinery margins.
Right. Mr. Surana, thanks very much for giving us those details and giving us that perspective on how business is shaping up for you. We wish you the very best for the future.